video, I'm going to show you how FXNewsBot trades the news. Right now, what you see here, as you see, in Australia, interest rate trade was just triggered, and this robot is called FXNewsBot. This is version 7. It uses my FX book calendar, and when the calendar shows releases its actual figure at news release time, this will automatically trigger trades. That just closed because it hit take profit. That'll trigger trades in the direction of the deviation. So this my FX book it's a pretty fast calendar. It's not as fast as calendars where you can trade the spike during news trading. So this enters like a few seconds. Here, let me show you on the 1 minute chart here. Okay, this is when the news release happened. And let me go to the history down here. These are the trades that the robot has been triggering during news releases. And we just triggered this one right here. Okay. So as you can see, when the news release was released on my FX book, it usually triggers after the spike. It doesn't trigger right at the spike. And by the time it was released on my FX book, this was already done. That's how fast this happens. That's because there's paid news sources that where everybody finds out the information a lot quicker. But this robot basically triggers after the initial spike is over. But if it reaches a certain deviation, it can often trade for for the next hour or two to come. It can go in the direction of the deviation. So it doesn't really matter whether you trade the spike. The spike can be risky. Sometimes there's conflicting reports, and it might go up and it might go down and hit your stop loss one way, or so it's kind of good, that it sort of just waits for this 1 minute candle to get done. And so what happened here, the way that there's so many settings in this EA, it also has a built-in currency meter, and you can adjust the currency meter. So what this does is, for example, when there was this Australia release, it looked for the currencies that were where the Australian dollar was strong, and whatever other currencies it was trading against were weaker. That's where it would trigger the trades. And in this case, since it was such a strong release, it triggered it on I think Australian US dollar. Yeah, it triggered on the ones I had set up. I only had, as you see here, Australian US dollar and British pound Australian dollar. And I could have had other odd Australian Aussie pairs up there, but I didn't. And as you can see here, in the few days that I've had this set up, these are the news releases where it has been triggering trades. And it does have martingale, optional martingale, so that if a trade does a whipsaw up and down and hits, it can trigger a limit order, a martingale limit order, and increase the lot size. And so once one of the limit orders hits take profit, it'll close them all, and so you end up with an overall profit. The only time that doesn't work that good is, for example, say the deviation was buy, but then there was another release where there was a strong deviation for sell. So for example, if this had triggered a bunch of buy limit orders of martingale and sell limit orders above, it could have triggered all those martingale limit orders, buy orders, and then hit stop loss on the other side. You would end up with a massive loss. That's the only drawback of using limit orders. But I explain it all in the manual. I also have another martingale so that you just use one trade. If it goes down and hits stop loss, then it'll open a buy order next. Or it'll open, like say it triggered a buy here, went down and hit stop loss, it'll open a sell right away. And so if it continued to drop, then it would hit your take profit, and it would double the lot size, so you would get all the profit back. But it's a really flexible robot. I just mainly wanted to show you how it just got this trade. And this right here was one of the stronger news releases. And the way this EA is set up, sometimes you have to, let me see if I can open it. It does a lot of calculating, so sometimes it takes long to open it. But you can actually trade any high, medium, or low impact news release on my FX book calendar. Or what you could do, if you don't want to trade like any and every release, you can actually put like say you don't want to trade low impact, you can put low impact on false. If you only want to trade a high impact, you can put medium impact on false too. It would just take patience, because there might not be, like, you might get fewer releases during a month, but they might be more probable if they meet the deviation. And the way you can use get the best of the best news releases is you put this on true, and then it would only trade these news releases if these deviations are met. If they aren't met, then it would ignore it. Like, for example, say there was a non-farm payroll and you're trading only custom deviations. When that came out, say the deviation was only like 50, which still can be a pretty huge mood, the EA wouldn't take it because it wasn't 70. If it hit your 70 deviation, you would be almost guaranteed, even after the spike. If the spike was like 100 pips and then the EA entered the trade, it might still, go in your direction for a ways. And sometimes all you really need to do, if you want, is just go for your 10 pips a day if you don't want to risk, in case there was a spike and it only went down a little bit more after that and then retraced and never went back down again. So you can aim for small pips, or you can use the trailing stop and the break-even inputs. And I think I had let me see here. Yeah, I thought I had a trailing stop turned on, but I didn't. But if you have trailing stop turned on, you can adjust it, and then that way the stop loss would follow your order. Say it would keep going down if the price kept dropping, it would keep following and you get more pips. But then if a whipsaw back shot up real quick, then it would hit your trailing stop right away, and you can end up with fewer pips. So I'm going through all this kind of fast, but it's all explained in the manual. So once again, if you have the deviations turned on, you would only get all these trades you see here, all these USD, Canada, British pound, New Zealand, Australia, and I didn't put any Swiss franc or any yen or any euro custom news releases in there. These right here are generally the best of the best, and once again, it might not always meet the deviation, and then it would be a no trade. So even if you ended up with just 10 trades a month, it would still be good, because you'd almost be guaranteed profit, unless there were conflicting news releases that cause the price to whipsaw. But so, or you could even change these deviations. Say you don't want it to be 70. Say you just wanted to trade the non-farm payroll, even if it was only 10. You can do that. These deviations right here, some of them are kind of high, but it's almost guaranteed if it hits that it would be strong enough movement that even if there were other news releases at that same time, it still might be strong enough to go in the right direction for you and get you some pips. But there's also other inputs in here, like for example, trade multiple releases. What this does, say there was a non-farm payroll news release and another like unemployment news release or something all at the same time. Since this is on true, it would actually trade all of them. And the only drawback of that is, say the non-farm payroll was a strong sell for USD, which would mean like on euro US dollar, price would shoot up since you're selling USD. And then say the unemployment was actually better. So what would it do? It would trigger a sell for this, but it would buy euro US dollar for the worst deviation, but then it would sell euro US dollar in favor of USD if the unemployment news release was better, and then sometimes the price might whipsaw a little, but it might go in the direction of the stronger release. So that's the only drawback of trying to trade any and every release. Sometimes there's even 4 news releases at the same time, like say at 8:30 New York time, there might be 4 USD news releases, and SCA will trade all of them. Some of them might be buys and some of them might be sells. So what you can do is put that on false, and then what it does is it only trades those news releases if they're all in agreement. For example, they all have to be shown a buy or they all have to be shown a sell, otherwise the EA will skip them. And once again, this would require patience, because you might be all excited thinking, oh, finally some news releases, I'm ready to make some money, and then they might be conflicting, so the EA is not trading any, and it'll wait till the next the next news release. But this does help because it helps filter out in case there's conflict in reports. And revisions too. If you have trade revisions on true, sometimes there's a news release, but then there's a revision. And sometimes on the calendar, the revision shows up before the news release. So say the revision was showing a strong sell, but then the news release came out and is showing a buy. The EA won't enter any trades because sometimes the revision can influence the trade. It could end up going a different way than you were thinking it would go. So this too will help filter out. But if the revision is a buy and the news release comes out and the deviation is also a buy, then it'll go ahead and enter the trade. Or if the news release came out and it was a buy and opened your order, and then the revision showed up a couple minutes later and it's a sell, it'll actually close your order. So it's just something you want to experiment with on a demo account to find the best settings for you. Or if you just put this on false, it will disregard revisions. It won't trade them. So the EA also has inputs where you could say you only wanted to trade USD news releases. You can just go up here, you find, and you can put everything on false and just leave USD on true. So if you put Euro, British Pound, Japanese Yen, put them on false, and so say it's on the Euro US dollar, but Euro is on false in here, it'll just trade USD news releases, and when the Euro news releases come out, it won't trigger any trades because you have it on false. It'll just wait for the USD news releases. And the Swiss franc news releases usually aren't the best to trade. I would probably keep that on false. They have good, they have a lot of control over their currency. It can do good sometimes, but or you can just leave it on false. New Zealand, they have an occasional release. Probably the ones in the custom releases would be the best to trade. So if you had custom deviations on, it would ignore all the other news releases once again and only trade the ones that are in this list that are on my FX book calendar. And there's also other inputs where the Forex factory calendar as a backup. This EA did used to trade the actual Forex factory calendar, but they kept changing their HTML code, so the EA kept it ceases to work when that happens. So far, my FX book hasn't changed their HTML. If that ever did happen, it would be fixed, as soon as possible, and the new version would be released, free of charge. It'd be in the members area where you can download it, so it would start working again. But as a backup, or it doesn't have to only be used as a backup. You can use it if you want without my FX book. But if you put where it says this is a parabolic SAR FFCal XML, what that would do if you put that on true is it would use a Forex factory calendar. Their XML calendar is a lot more, it doesn't change that often, it's a lot more stable, it's better than their HTML, but it doesn't have the deviation. It doesn't release the actual figure at news release time. It only shows the forecast and the previous. So in that respect, it's not as good as the MyFX book for trading, because with the MyFX book, it'll paint the deviation and it'll paint the actual figure and it'll paint it in real time, so you don't have to click anything or any refresh button. But on this one, the actually never shows up on the XML. So the way this will trade, when this is on true, you have to also have this on true. This is the PSAR. I'll show you that in a second. And close that opposite PSAR. I'll just put that on true. And PSAR after news minutes, 60 minutes. So what this would do, if I put this on true right now, it'll turn off my FX book. And it switched to FFCal, the Forex Factory XML. So that's the mode that it's on right now. And then it, depending on what settings I choose on the, you don't have to add this indicator to the chart, but this is what I just turned on in the EA. And I believe I had it set at, you can change inputs to whatever you want. I had it set at this. And whatever chart this on is at news release time. Like say it's on this one. This is the 1 minute chart. I would probably keep it higher maybe. So what this would have done, as soon as the news release time came for the cash rate, I think on Forex Factory Calendar, it's called, for Australian, this release was called cash rate. It has a different name of my FX book, interest rate, but it's the same thing, just different names. So as soon as the cash rate release came out, this would have automatically triggered a sell. And the reason it would have triggered a sell is because the PSAR was already showing a bearish. So it's basically trading in the direction of the trend. But what it would have also done, say it was a strong buy, or say this is the British pound, Australian dollar, and it was a strong, the deviation was in favor of the Australian dollar. That's why there was a sudden drop. But say, I'm sorry, we're looking at this. This is the 1 hour chart, so it's not even hardly noticeable. Let's see what time that is there. So that's why there was the drop. And since it was a bearish, but say it was against the Australian dollar, and say that the deviation was in the negative, so that this shot up instead of down, it would have still triggered a sell because the bearish. So it would have gone that's the only drawback using the FFCal as a backup. But instead of using such a huge, you can use something like this. Okay, so we're on the 1 minute chart. So say it was on you had the 1 minute chart instead of the 4 hour, and some of these are hard to see because they're so close. So right at news release time, it was still, looks like it was bearish. It may have triggered a sell and you would have been in profit. But if it went up, these dots would have changed right away to bullish. So it would have closed your sell order and opened your buy order, and then you would have also profited that way. So it might be better on a lower time frame. But sometimes when you get conflict in news releases, after the news release, it might look like this. So what the EA would do, it would open a buy here, say the news release was here, and then this appeared, then it would close the buy and open a sell, then it would close the sell and open a buy, and then it would do that, and you would end up with all these losses. And it would only do that for as long as you wanted it to do. If you had a PSAR set at 60 minutes, then it would trade the first dot. Each time a first dot appeared, it would trade it for the next 60 minutes, or you can just trade for the next 5 minutes or 15 minutes. And you can also turn on martingale so that if it closed in loss at one PSAR dot and a new first PSAR dot appeared, then it would open double the lot size and open another order. And if you had take profit and stop loss at 0, when that happened and when your sell was triggered here, what it would have done is it wouldn't have closed your trade until a new first dot appears. So it would have closed your trade right around here. that once again, that might be best to use if you're using the custom deviations, because there's a lot of other news releases where you don't have such good movements, only if your deviations met. So yeah, you would have had over like maybe over 70 pips by the time it was over. And of course, if the deviation was never reached, it wouldn't have opened a trade. It could have missed a deviation by just one, and then you would have still had a nice big move, but you would have missed it. So once again, you can lower the deviation. This one right here, this is where I had the trailing stop open. It was on my home computer. I was just showing you the VPS. This right here is the home computer, and the trade was triggered right here. Oh, I'm sorry, it was triggered here, and then that price dropped from there, and it kept dropping. And instead of using a take profit, if I had to take profit at 10 pips, it would have closed right around this area. But instead, I used the trailing stop, kind of a larger trailing stop. I'm not sure where the trailing stop kicked in. I can't remember where I have it. Maybe if it reached 20, then the trailing stop started moving. So right now there's a trailing stop following it, but price is starting to retrace after that powerful move, so it may end up hitting the trailing stop right here. So again, you can actually adjust the trailing stop. So I could have adjusted it a little better, and maybe it would have been down here and would have closed right here. Or if I didn't use it at all, it was just automatically aiming for 40 pips, which is usually what if the custom deviations are met, you're usually like between 40 to 60 pip moves. I could just put like 40 or even 30, since it doesn't quite get the spike handle. It would have closed like around this area. And although this is on the hour chart, it still will trade. It'll just trade the news release, when it happens, and we'll see what it looked like on the 1 minute chart. So this is where the news release took place, and by the time it was released, once again on my FX book, this was probably over with. And well, it looks like in this case scenario, it looks like it made it right here. See, that's where it triggered the order. So it was into the minute, and according to this, the news release was at 5:30 my broker's time, and that's when it was released at that time. But once again, the move was already starting to happen from news release sources that are a lot faster, usually paid sites, stuff like that. But if I ever can get it to trade the spike, I would probably need to get a different calendar, but it would be more difficult because it would be a paid calendar, and I don't think this kind of EA wouldn't work on a paid site, because it would try to access if somebody bought the EA and then and then the EA would be trying to place a trade on a news calendar that you have to pay a subscription for to access the calendar, and so it wouldn't work. You would have to actually buy the subscription, and then I could see if that's possible in the future, but then it would require everybody, if they want to use the EA to buy a subscription for particular news sources, and then the EA. But I don't know. I don't know if I would do that. Also, I already mentioned this, I think, but each time there's a news release and you get a trade, this will let you know what happened. And I think this was made with a few earlier versions. This hasn't been, at the time of this video, I haven't sold any copies yet, and I've been working on this for several months, the EA, paying programmers to work on it, and it's finally up to version 7.03, because I'm trying to get it better. We had to switch calendars, and other things weren't working, and so far this version looks good, but up here some of the version was still a little messed up. But there still will be losses, and it all depends on your choice of inputs. Your best bet is to go with custom deviations and just wait for that to happen. It might not, the day might come where there's finally one of the news releases on that list, and then it's a no trade. So just wait to the next one, and or you can experiment on a demo. Right now, I'm thinking of offering possibly a demo version of this so that you can try it before you buy it, and you don't have to prepay. I won't need your credit card number. You can just use it for 30 days on a demo account. Find some settings that you like, and this will only work in forward testing. I mean, in it won't work in back testing because it needs the uses the calendar. Although there are some settings in here that will. If say you don't want to use the calendar, say you just want to trade based on the currency strength and weaknesses, or you just want to trade the PSA R dots, you can actually there is a mode in here called CSM. This is currency strength meter standalone mode. If you have that on true, and I explain how this works in the manual, how it figures out a currency strength or weakness. Like for example, say I put this at 60, and then say I put this at 24. It would look at the last 24 bars on the 1 hour time frame, and then it would look at the high and the low and current price action, and then it would calculate a strength or a weakness for a currency, so an individual currency. So say it's looking at USD, and it does all this automatically internally. It'll look at the USD on all the USD pairs and come out with an overall currency strength or weakness between 0 and 9.9, 0.0 and 9.9, and then right now it's just on the since I was trading the news releases, I just have look on the 1 minute chart, looking at the current 1 minute channel, so 1 minute candle, so that if there was a sudden spike, it would detect that the spike was like say the deviation was showing a buy for USD, which would be meaning to sell euro US dollar, because when you're selling euro US dollar, you're buying USD and selling euro. And if the deviation was shown buy, the currency meter on all the USD pairs that it's on might be showing, like say on Australian dollar it was weaker, say it was like a 5, it won't enter that trade, but say like on the euro US dollar it was like a 9 strength, it would trade that. So the Australian US dollar, it would be like, it would almost be even, like just as an example, say it showed USD for 5, it would be let's see, if it was showing 5 for that and 5 for this, it would be a no trade. But if it was showing like a 9 for this, no, that's not right, because it would still be showing a 5. It actually depends on what you have in your inputs. That's right here. I didn't have time. I'm not pre-thinking this video. That's why I'm but I wrote all the details. So I'm telling it to enter the trade if the strength is between 7 and 9.9, and the weakness of the other currency has to be between 0 and 3. So since it was a positive deviation for USD has to be between 7 and 9, and it'll only trade a currency that's between 0 and 3. So if the Australian currency is a 5, it won't trade the Australian US dollar. It won't trade that pair. But say the euro is a 2, and USD is like an 8, then it would trade that one, because it's within your settings. Again, you can adjust and customize all that, and there's other inputs in here that I explain what those are in the manual. But when you put on the standalone mode, you can find whatever settings you want in here, and then it'll let's go back here, standalone, true, and it tells you it's standalone. So now it's not on news trading, it's only trading the currency meter based on strengths and weaknesses of currencies. And it even has a mode where if you put on the currency meter USD and yen pairs, it'll trade all USD and yen pairs, and it will only trade them, it'll only open buy orders when USD it'll open sell orders when USD is showing strength and yen is showing strength. Depending on which pair it is, it'll actually sell all the yen pairs, and it would be selling like euro US dollar, but buying US dollar Canadian dollar, because when you buy that pair, you're actually buying USD and selling Canadian. But when the yen and the US dollar are both showing weakness, then it would buy all the yen pairs, and it would buy like euro US dollar, but sell the US dollar and Swiss franc. But the opposite pairs would have to be in the strength or the weakness areas. I'm sorry if this sounds all confusing. It's all in the manual. So anyway, that's all for now. Thank you for your time.